This is a warning to all Americans. Bidenomics will tell you that the economy is doing very, very well, but we have to ask ourselves a question. Are you able to pay your rent? Are you able to pay for gas and groceries? So Biden will tell you the economy is strong, but I'm going to show you the facts, figures, numbers, logic. But most of all, at the back end of every video, I'm sharing with you exactly what I'm doing to free my family during the craziest economic times in the world. My name is Coach JB. What I work to do is make very complex macro and microeconomic strategies very simple so the normal everyday person can implement them. So a lot of people ask me, how do you ensure your wealth, Coach JB, during the worst economic times in the wealth, not believing in the US dollar? I share mine in tax code 7702. You can look it up. 401k is a tax code. Tax code 7702A. Look it up. It was created in 1913, ironically, when the Federal Reserve was created. It's insuring your wealth. They teach you how to insure your car. They teach you how to insure your house, but they don't teach you how to insure your wealth like the wealthy do. That's what I do with my wealth. So down below, you can click the link to set up a free consultation with my licensed insurance team. I have licensed insurance agents in all 50 states to support you with the free conversation. I also have a 16-page, absolutely free book that you can download to see exactly what I'm about to talk about on the back end of this video. All right, so let's dive right into this. Bidenomics, remember I showed you guys yesterday, the tweet that Biden put out said that the economy is good to go. We are super strong. Of course it is for the elites. Of course it is for those people that got all the money that was printed, the Cantillon effect. It goes to the top of the house and it bleeds down to the public, into their savings, and it goes back into the fractional reserve system. Family, they're approving bills to send billions over to Ukraine, guys. And our borders are wide open. The normal everyday American cannot afford to live. And I'm about to show you what's happening. Now, I've been predicting this since 2021 when the economy, they started print money like crazy. 2022, I told you guys in back end of 2023, going into 2024, layoffs were going to start. The middle class was going to get wiped out, leveraged towards technology. And here we are. They will tell you the economy is doing good. But I'm telling you what, guys, with the stock market being high, the crypto, it doesn't make any sense, guys. This is all fake money in the system. So you have to follow the wave. Now, the good thing about this, if you understand how this works, you can become very, very wealthy during these volatile times, but you got to be super disciplined. Okay. So now we're going to look at what I've shared with you guys. I've showed you guys American credit card debt is at an all-time high right now. So Biden will tell you the economy is good, but here's what's really happening.
Bring in Breitbart economics and finance editor John Carney. John was talking over Hillary Vaughn. No, I'm just kidding. You said it's an important point, and then
right.
Go.
Well, so what we're seeing is a rise in delinquencies at a period when we have very low unemployment. If unemployment starts to creep up to near his,
and credit cards,
right? So, high delinquencies in credit cards and auto loans, and if we start to see the unemployment rate creep up, remember we're at 3.7, so people aren't able to pay their bills even though everybody has a job. If people start to lose their job.
So this is what they manipulate you with. And when they tell you about the economy, the economists and the Bidenomics, they say, oh, the economy's strong, guy. Job market's super strong. But on the back end, even though the job market is strong, the consumer credit index is at all-time high. People's savings are drained. Even though they have jobs, they can't pay their bills. They're going delinquent on their credit cards. They're going delinquent on their auto loans. And now housing is going to become extremely expensive.
Which the Fed says is going to happen. Then we're going to see those delinquency rates skyrocket. So even though we have a kind of pretty normal delinquency level right now, it's not normal for the level of unemployment we have.
So I want to know, how do you fix this? And I want to know if Joe Biden's solution is correct to just call out greed and shrinkflation. Is that how you're going to fix the inflation problem, John?
Right. Joe Biden's thing reminds me of the joke that inflation got so bad they had to cut Lent down to 30 days.
Well, that's the beautiful part about this. Think about Bidenomics. So with Bidenomics right now, they basically are telling us that the economy is good. Biden is blaming this on the corporations. He's saying the greedy corporations made this happen. Guys, it doesn't make any sense at all. Okay, so let's dive into the next video here. Okay, so we take a look at here. It says many consumers are out of their savings right now. I've been telling you guys about this. The savings is now drained.
Says that the Fed's wait, then drip strategy on rates greatly increases the chances of a recession. Joining us to explain is Campbell Harvey, professor of finance at the Fuqua School of Business at Duke University and director of research at Research Affiliates. His model for predicting recessions is 8 for 8. and he says it has yet to experience a false alarm. And what is it signaling right now, Professor?
So the inverted yield curve model is 8 out of 8, but importantly, without a false signal. And it is signaling slower growth and a recession. And I'm hopeful that that plays out in a soft landing, which would be reduced growth and a mild recession, something like 2001.
How long between the initial inversion and when, have we already gone past historically the period of time when we were already supposed to be seeing a slowdown?
So no. So on average, the lead time is 13 months. And right now, we're just into the 15th month. So we're around the average right now. And it's far too early to say there's a false signal here.
Okay, so what I think is going to happen, they're going to hold rates strong in March, and then in May, they're going to lower interest rates during the presidential election or before the presidential election. That's going to make assets go into hyperinflation. That's going to destroy the middle class, which is going to cause a soft landing and a recession. And then I believe that they will start to print money once again, which is going to make your cash more or less valuable, less valuable, less valuable, less valuable, right? So this is why it's important to be a retail investor and have an investment strategy. Take sovereignty of your own wealth, guys. A 401k isn't going to get you to retirement. Just do the research. 401k is one of the worst investments, just my opinion. It's one of the worst investments out there, guys. It is not going to get you to retirement. That is the IRS's retirement, not yours, guys. They hold your money and then they tax you on the back end. And do you think taxes are going to be higher or lower with our economy? They're going to be higher because taxing is how they pay the bills. And what they do is inflation is illegal taxation. So if they can't tax you, they raise inflation. It's just the only way you can win is understand how the money game works. Okay, so inflation, they wanted to bring inflation down. That's what they've been doing, jacking up the economy with rates. Well, guess what? Inflation didn't go down.
You can see the frown on Jay Powell's face as the good news doesn't necessarily continue. CPI on a month-over-month basis up 0.3% year over year. That puts us at 3.1%. That's down from 3.4, but it's not the 2.9% that a lot of people had hoped for. The core rate comes in at a 0.4 rise, much higher than the 0.3 anticipated. That's a fairly strong core report. Leaves core inflation at
Listen to what he says about food. Food just continues to go up.
3.9% after 3.9% the month before. No progress there. Basically, we see some of the usual suspects here. One of the biggest reasons that we saw CPI come in stronger than anticipated was housing. Housing costs, shelter costs up 0.6% after 0.4 the prior 2 months. And the same thing is true of owner's equivalent rent. So home prices still pushing up, rent prices still pushing up the CPI. Gasoline prices, as you'd expected, went down 0.9. So that's the good news. But food prices were double what they were the month before, up 0.4 after 0.2. So
let me ask you a question, Biden. You say the economy is strong because of job markets, but if the housing going up and the food's going up, the normal everyday person that's not sitting in the White House or sitting there able to print money, we're struggling. The normal everyday person is struggling right now. Okay, so you have to start to take sovereignty of your wealth. You got to develop financial literacy, financial discipline, and then learn how to earn. And then once you learn how to earn, we have to learn how to protect, because here's our national debt, 34 trillion. So the only thing they can do is lower interest rates, okay, which is going to make our assets go into hyperinflation. And the next thing they can do is print more money, because there's no money in the system. They have to monetize money. They have to monetize debt, guys. So they're sending billions over to Ukraine. You have to ask yourself the why behind that. Go deeper into origin. Why are we sending billions over to Ukraine when we're 34 trillion in debt and your taxes are paying the interest on that debt? So you can fight the invisible enemy, or you can start to understand how the system works. You can understand who the Federal Reserve is, why it was created, what it's for, and what it's here to do. Their job is to balance out the markets. That's what their job is to do. Their job is to basically print money, right? And balance out the job markets. So why aren't they doing it? Or why? And when they do it, it doesn't help you. So since 1913, the dollar has completely collapsed. Silver's maintained its value. So here's what I'm doing personally. Okay. All of you should download Merlin. And yes, I'm proud to talk about Merlin. I saw somebody comment saying, stop pushing. I created this. We created Merlin, 36,000 lines of code. the programmers created it. I was one of the creators and ideas of it with Johnny Crypto as well. And so we developed Merlin, the smartest way to track. Why? Because we pulled profits in 2021 to 2022. That's what created our beginning of our wealth paradigm. And we had thousands of people not pull profits because they thought they were going to get rich quick. It doesn't exist, guys. The Dogecoin millionaire is no longer a millionaire. He didn't pull one dime of profits. And now he has, like, what I think he said it, like 50K now. He was a millionaire. Imagine if he would have pulled half of that, secured it in an index universal life policy, borrowed against that policy, and bought back into Dogecoin when it collapsed. He would be a multi-millionaire this bull run. Guys, we have to understand, number one, crypto is a very speculative asset. Number two is you need an exit strategy. All of you guys can download Merlin down below. 30 days for free. We teach you how to set up an exit strategy. And that way you can remove the greed gene. And when it's going up, because it's going to go up really fast on the back end of this year. So you got the Bitcoin halving in April. Okay, then we're going to start. I'm going to keep talking about this. About 90 days after, the wheels are going to start going on Bitcoin, especially with 80% of the supply has not moved now. And it's becoming more and more scarce. Bitcoin is going to shoot through the roof. And then that profit is going to go into alternative coins, XRP, XLM, all other coins, right? Then right there is when I start pulling profits on the way up, because most influencers are going to, clickbait you and make you think it's going to go keep going. You're going to get rich. You're going to get rich. And what happens is when it peaks about 30% before everybody says it's going to go to 100,000, it stops at 70 and it comes collapsing down. So I've already pulled profits 4 to 5 times. And I'm max funding my index universal life policies. That's what I'm doing. It's work for me. Max funding. Why? Because I want to secure my principal. Insurance companies, look at how many insurance companies get bailed out. Banks put their money in the insurance companies. Okay. Insurance companies are opposite of banks. You put in $10, they lend out 9 of your dollars. Every dollar you put in an insurance company, they have to have 3 to back it. They're completely opposite. Why do you think? Go look at how much Bank of America and these large banks have in insurance. Why do you think they're insuring your wealth? Why do you think they put insurance policy on the executives, bank-owned life insurance? So I just put my money where the bank is. I cut out the third party. I use my bank to transact, to pay my employees, to pay my team members, anything above my bills. I'm either putting in a cryptocurrency, either putting more money to max fund my index universal life policies, or I'm putting more into more businesses. I want my money out of fiat currency, American dollars, and I want it into tangible things, whether it's business, precious metals, real estate, index universal life, right? So my next game is going to be real estate. So cryptocurrency, I have an exit plan. I'm exiting, I'm max funding my policies. From max funding my policies, I can borrow against the cash value if I choose to buy more assets tax-free. On the back end of my life, I'll be able to pull from my policies tax-free. Okay, so that's the key, is we want to use this bull run to set our family up for success. Okay, if you make $1 million in crypto, think about that. The average 401k at Fidelity is $294,000. If you make 300,000 in crypto, get the hell out, guys. You did what takes someone a lifetime at a company in a couple years. So don't be greedy. That's one of the biggest things. Don't be greedy. And then really, really, really understand financial literacy and how money works. Okay. The 1% will always remain the 1%. Jim Rohn says you give $1 million to every single person, it'll end up in the same 1%'s hand. Why? Because you don't rewire the foundation. You have to understand wealth. It takes one person to rewire the foundation. So I'm the person who rewired the foundation of my family. I'm passing it on to my kids. My kids will never struggle with money. Their kids will never struggle with money, because we're going to teach them and educate them on how money actually works. Okay. So if you're still here this long, I want to share with you guys a special thing that we have going on. I have a 4-week webinar series. Okay. You're going to be coaching with me personally with a group of people. So we're looking for 100 people. The next one starts in March. You have to interview. It fills up fast. Okay. So it's a 4-week webinar series. Week 1 is cryptocurrency allocation, my exact portfolio. I show you exactly what I'm doing. Week 2 is how to get in, how to exit the markets, how to set up an exit plan. Week 3, I break down everything I'm talking about right now and all the resources, phone numbers, contacts, everything you need. And week 4 is our most popular, is showing you with the Rockefeller Trust. And it's not, do you need a trust? It's what type of trust do you need? And then every single month, I'm doing a call with you guys, with that group of people, with the Warrior Ascension group. And I'm going to be sharing with you guys my meeting with my CFO, even if it's the same thing every single month. I'm going to present to you guys exactly what I'm doing. As I learn and grow, I'm going to present to you with what I'm doing. Here's my portfolio. Here's what I'm doing. Here's the moves I made. Here's what I'm looking futuristically. So we'll learn and grow together. So it's a 4-week webinar series. Okay. You also get access to our academy, my 5 phases, which is financial, rewiring the foundation, financial literacy, financial discipline, how to earn, and how to protect. And then you can go through my revolutionary 120-day challenge. So click the link down below of this video or in my social media platform. You have to interview for that webinar series. You'll meet with one of my team members. They'll see if you're a good fit, but do not set an appointment if you're not serious. I'm only looking for people who are serious. You're going to be on a 4-week webinar series with me and my team as well. You're going to meet most of our team members, and we're going to rock it out, man. We're going to kick ass in 2024, and we're going to work really hard to lock arm in arm to build wealth for our families in 2025. Warriors, rise, get your shit together. Let's go.